Good morning, everybody, and good morning to this new Bund session on Wednesday, the 7th of August. I'm not going to talk too much with the open phase because, like yesterday, I don't wanna be. I wanna see then the possible open rejection reverse um, is played without me. So just very quick, you see right now we have active long positions in the book. That means the pre-market profile has already made some B model volume profile, and you see that here at the 84, when pulling back to this level, always absorption takes place and people getting also active into long. That also happens then very significant here at 8 o'clock and 51, as people then starting immediately to buy. Now there are longs in the play from this 84 area on, starting and about to take out the open range high, the open range from the cash open. That means we are very, very close now also to the overnight high. Increase of volume would give us a very good supreme risk reward chance for a trade with long continuation. As we know that this happened not to be played, there's also the chance that if the people are sitting in their long and failing now to expand, or failing with the expansion of the IBR at the 92, or failing before even, that there is the chance then that we can see the short trade. The short trade is not having the best risk reward today. As I already said, that the volume profile today morning is a B model. That means there's already some separation, a long collecting area, as I said, at the 84 area. So I wouldn't go now for the short here, because this is not good risk reward. And this would also not be the open rejection reverse, because for the open rejection reverse we should see at least a test drive or a open drive, and see then failure here at the overnight high or with the expansion try of the IBR high. So no trade in this, only looking for the longs, only with acceptance and absorption, or you go in here at the 85 area right now and looking for double rejection to go again into the long, only with good rejection signs. And remember, nothing has changed. The other long mark for long range long trades would be around the 79 area. So this is our activity for the very moment. In the footprint chart, it's better to see and switch in between the 15 minutes to see where we had the big picture, and then looking at my hypos, and for the, I would say here for the purpose of the session, to learn how the micro picture and the market price involves, is better to then look at the footprint. So let's just wait what is happening. If we see already the rejection here at this very moment, accumulation zone, or if you're looking for the long, if we have the rejection signs triggers here at the 78-79 area. And please see, as we crossing the volume edge of this bimodal morning distribution, this volume edge is at the 84, 85. While we cross, we haven't seen a double rejection yet. So that means there wasn't a double rejection yet that would make us to go and look into a long trade. Instead, we saw, while we traded through this edge and reached the area at 82, we see that we even had delta bearish on the downside. There was only, as we already reached the 82, that means as we already went through it, we seen just some little pulling back. We just seeing some profit taken off short. But as we pulled back, immediately here, the short sets in again. That means the next possible activity area, I call it possible because that's just the next area where we are about to arrive, is then the area of 79 and 80. Only this area could give us a good risk reward to look for a long entry. And you know, again, we only take the long entry if we see the trigger for the rejection, for responsive buying. And this is what we're now waiting for. If not, they can even go lower and test yesterday the overnight low or even the yesterday value area high. That means ongoing pressure into this area, 79, into this area, even 67, would mean higher probability of a falling prices first to test lower areas before other time frame traders getting into the long. So be careful. So you see that they already tried to play the long at this level here. Okay? You see this in data, you see this in the behavior, but as I told you, this is not our area where we want to look for the long. This is in the middle of the pre-market distribution. This is in the middle of the overnight distribution. This is the we feel comfortable area where the at the moment and pre-market POC is. Okay? This is not smart to trade here. We wait now as long as we are in a distribution that is normal shaped and looking for a range kind of entry into the long. We can make it when we arrive the area around the 79, and then we watch it. Then we watch if we see our rejection signs or if we not. we not see, we're not going for the long. That's very important. So give the market the time that it needs and grab your chance if you really see the triggers we want to see. Now we're in the activity level. We're in the activity zone. And we have now, we now see in the delta first sign that proves us to have an advantage on the long side. But that's only the first sign. We need second sign. We need some more buying. But first of all, the important thing is that the pressure in the short had a little bit cooled down. So it means it is some kind of acceptance reacting to this liquidity provided. Now, if you're entering now with a cheap price here around the 81, you have to be aware of that they may test it a second time. So this would be now the more aggressive entry right now for the long. But you have to be aware that they may test it a second time to push lower and take a look if the liquidity is real, or to get some more pieces, fishing liquidity, whatever. This is always the same thing. The more aggressive entry would have happened, could happen now. I would prefer in a market that was more intraday micro level shortish, like this move was placed by the delta. I would wait for another attempt to the downside first and then go in. It of course then can happen that the trades runs without me. But now we see that the first longish tries here, closing position, did not have impact to the price. We could not get above the 82, but testing now the low again. So take care if you see then again a lack of interest in selling on the low, or if they low, quick rejection and then increasing active buying. This would be then the buying rejection where we want to try then to get into the trade. If any other signs or opposite sides happening and triggers happens, we don't go for the long. For example, my stop is then below here the 78, that means at the 77. Because this block of what it seems to be real liquidity with 700 contracts should be, if it's real, then it should be a support. And if it's not helping and they trade through it, then the sellers are just bigger at this time and they want to see lower prices. But anyway, this is a good level here for the long with a good risk reward, as long we see that the support holds and we see that the delta is not going super bearish again and trading through it. But then our stop helps us very quick at the 77, as you then would be with only a small risk in this trade. And on the other side, we have the chance that we'd use this range long entry to see again the 85 and 89 area. And if you're trading more contracts, then would even have a good reward chance, a good chance for a long continuation. This is why you're thinking and trading statistics and risks and chances. So it doesn't matter how this trade works for you. This is just a good statistical reward for you scenario. Doesn't matter if it this time works or not. This is a lucrative trade in terms of that everything fits. You just have to live now with this moment of not being in control, where it's not decided yet if bulls or bears right now here win this area. But we see some first signs that also made us seeing an advantage on the long side, and yeah, we wait. Okay, now so you have seen that they try to push lower and lower. This decision is not made yet, still not made, okay? Now we see that they try to push again and again. It's now time to take and pull the stop closer, because the profile now becomes a little bit more skewed to the downside. This is a bearish imbalance. That means if the buyers really want to show that they are back in control, we don't want to see prices going back to the region where we started yet. Okay, this is very important, because in the picture here we see a little bit of advantage just from the volume profile, that they may also be very powerful, the bears, and trying to get into control. So that means for me now, as we reach now impulse phase 1 and impulse phase 2, I pull my stop now at the entry level. And my target 185 is where I'm waiting to get filled for the position for my first position long. So this just happened. To be honest, this trade, I had this feeling of a little bit uncertain and uncomfortable right around this area of the trade. I got in at, I have to make the order fills on. I got in here at 9:14, 9 o'clock and 14. And because this was for me the first time when we don't only see closing of shorts, but also that everything is cooling a little bit down, the shortish behavior, we see some first closing of positions, and then at this moment we also see first people starting to buy. So this was for me the moment to say, okay, let's take on a limit buy for a cheap price entry. That's when I used to get into 2 ticks away from the extreme. 79 was the low. I entered with the 81. And the moment then, after my opening the position, especially the moment from 9 o'clock 18 to 9 o'clock 21, I recognized some negative thoughts like, again, maybe it won't happen. And also the emotion like, I don't like this uncertain feeling and not being in control at the moment, because this trade really forced some emotional pain, this old behavior, want to secure and don't want to feel the pain and suffering of a losing trade. But also when you feel that, if you feel that and react to that like revenge trading or pulling the stop or pulling your targets or flattening manually out of the trade. When you feel that, try following. Recognize the feeling and then say yourself, this is old behaviors. That helps you to stay in your normal life, to be in control. But in trading, you need other new behaviors that helps you and serves you better. So the thing is, if you on some day you really want to build new behaviors, I have to tell you, there's only really one way to achieve this goal. There's really no other path to this goal. There's just a way of acceptance. Don't fight those feelings. I know this is hard because you want to fight it, because you see this gives you pain or probable pain at this moment where you're not feeling in control. This was this very moment here. You see in the footprint, I show you again because I think this is a very interesting thing. When I was positioned here, then we got back, everything was okay at this moment. But then at this phase, you see, wow, they push really hard again into the low. And I know I have the support of this ongoing liquidity was provided at the 78. I knew my stop at 77 with 4 ticks was okay from terms of risk reward, and I knew I got the support. But it doesn't feel good because they sold 369, 82, 145, 342. Then even one contract into the liquidity proved that this is real liquidity, and then the bulls got more confident and get in active with market buying active and then taken out. But this area, of course, what do you think? Of course, this area I had most of the old behavioral patterns got activated, but I also stayed concentrated. I felt my breathe is not flat but fully. I'm concentrated. I'm feeling of, hey, acceptance, interesting. I'm now trying to move my stop maybe, or something forced me to end the trade because I'm not want to feel the pain. And I can say, well, fascinating. How this old behavior patterns now is working in my brain. It makes me feel. And then you say, okay, that's okay. Acceptance, that's okay. I know that it is, and I know, even though if this is a losing, it was a lucrative trade. And you know what? I love to have some losses, because this small losses helps my capital to rise. This is because this is trading. This is like paying your rent in another business, paying your rent and your bills for having an office, having some employees, and the money of lucrative trades that becomes a minus trade, a losing trade, but it's lucrative. That's just the bills you have to pay to stay in the business, and this helps you to execute all the time, only helps you then to make your money. And see how it worked out. At this moment we didn't knew, we only had the edge and the advantage at this certain level to watch for the long. We know from my hypos, from my big picture preparation, this is important level to watch. We then got the trigger, we entered, we get this phase of every trader. Sometimes it's longer, it's shorter, sometimes they push it really hard and you feel, wow, cool, but sometimes it takes longer. You have then this phase of in uncertainty, and then the trade worked out. We reached target 1. If you buy more contracts, we're reaching now the target 2. As said at the 89, this is this former high volume edge. So you could have made the first position like I made here, the second like here, and you can stay with the home run, because think of it. If this now becomes this pullback, it doesn't have to be, but just things in the theory and the statistic. If this now becomes a pullback trade only to the VWAP, buyers coming in here again, and if and only if 1 out of 10 times now this becomes the trend play and gives you 20 or 30 ticks, then look how comfortable it would be, or how comfortable it is, and how comfortable it feels that you have already entered in this type of distribution with the range long entry, because this is the most cheap entry one could get to get into the possible trade. And if the trade doesn't happen, then so what? Then you have a paid trade, you got your money, you got your second position, even reached your money, and now the third position you can make your stop to whatever, -1 or -2. Then what? You made money. And that's the thing what it's all about. So this doesn't have to work out every time. You don't have to make money with this third maybe contract or this third lot. But if it works out 1 out of 10, think of it. How many ticks you can make if we go back then into the range market and you just set your stop close now behind here because you made 4 and another 4, so that means you made already 8 ticks. So what? If you give away 2 ticks from this 8, would this be so a catastrophe? No. I don't think so. But you see, right now we don't know what's happening. If they're now pulling higher with high volume, this would a very strong and bullish sign. If not, then they may test the low again and even may test it and even get lower. Everything is possible. But we will remember if there's opportunity again for the long, then it's only for me at this area again, but only if the same signs of rejection happening. Right now, bulls trying to control, you see this here, this level where they started before. You know where they started before? Exactly, you're right, you know it. They started here with this absorption and then going active into buying with the 81, 82, 83. This is where we are right now. And if they really want to get back into control and go into the high again, then you would have a high chance that they want to expand this initial balance range high. So again, I'm gonna look for the long again, only if the triggers appear and only if we're not too bearish at the moment when we're going down and seeing then again the rejection. And if this is not happening, I'm not gonna go for this long trade. because then it's possible that prices, if they take out the low and the edge 78, that they may go back and test the next little small tiny POC at the 69. That's also the overnight low area, and even possible that, why not? They can do whatever they want. They also can go back at the yesterday value area high, and they would be still in control, because at the big picture, this was the last bigger control level of the buyers. That you could see this here in the late evening session. This is where we see some selling, but prices not going down, not going down, not going down. That means only one thing, right? Absorption. We also have this happened here twice yesterday with the noon and with the later afternoon. This is the area of yesterday VPOC, and also a high volume edge at the 44 level. So if you're a longer time frame trader, you don't give a single beep if price is coming back to here, because you can be totally comfortable, be still in control of the market. And do you see, the bulls still defend this level where the longs started before. This is still also the POC at the moment, okay? That means you see here people selling into it, people sold into it already here, people sold into it also here, and find active buying. Haven't find the active buying yet, as they already pushed some shorts into this level, but you see, right now, the bulls still say, well, let the people sell, let the people who trading the range to the low, let them, because right now for me this is a cheap price. That means already the POC is for some people, for some bigger people, at the moment at least, some price to get filled with their longs. And they taken it, thankful, with passive buying. I hope you understand this. I mean, of course you understand. If somebody sells into a level all the time and you see that is having not impact on the price, that price stays, that means that somebody refills the bid or providing liquidity at the bid. So this is what the price, how it happens in the exchange, that you sell into the bid and other buy the same guy the exact same amount if they matching, and then of course this can only be some who buys here at this level, because for a seller they have to be a buyer, and now they still sell into it, and some guy or some guys still collecting this short pieces and saying, okay, that's okay for me, I already start to buy here. If price is now going lower here to the 80 and 79 area where we were before, then of course there's the probability that this absorption is going on, and we see again this rejection trigger, and then people going back to actively market buying. That's the way, textbook way, what it would look like if we then see a range long. And the other thing is, if selling continues and this guy who appears here again with this liquidity cannot hold it because people who sell are bigger, then this is what? Then it's just a short move to the next acceptance zone. Or we see a short try to get lower and be ready for maybe some huge, big rejection. Everything can happen. But please now take a closer look. We are back at the edge at 80. This is our activity zone. So if you want to go for the long, please just do not only now click and go long, because we want to measure and want to develop a play where we can rely on and say that's the thing we can have and do have in control. And only if we do the things we have in control, then we are allowed to call this trade a lucrative trade. If you're doing something that you cannot do twice or prove it or having some system, then this is a lousy trade. That means you don't have to be mechanical and a static trader with a system, but there are at least some pieces you can control. For example, measuring where's the risk reward to see why this was, is it even a good to make this trade? Number 2, where to put the stop? Number 3, where to put the target? Number 5, how to react on price action and order flow to your stop handling. Number 6, when are you even allowed to make changes to the stop? Do you have a rule, or you're more like discretive and say no? I'm just making it. I don't know. I having this feel. My gut feeling tells me it. But if you can do this, then congratulations. But you always have to be aware. If you're an advanced or a beginner trader, you are not able to trade this way, because the emotions that are happening right now at the moment of execution phase and management phase will give you noise information. Noise. That means they will control your trading in terms of P&L and not of your strategy. So this is a very, very risky thing there. Okay, now let's watch. Right now, we have seen a first taking some profits here, and people now trying to push again lower. And you see this, it's still very, very bullish. I don't like it so much, I have to tell you, because they really quick started to get into the shorts again. So, of course, the buyer, the bull can be big and huge, and they will push it back again. And you see liquidity is still here provided, even pulled it one tick higher at the 79. But I do not like for the textbook range trade. Take a look back and look other days. What I don't want to see is this ongoing selling and selling and selling, because at the moment where the buyer says, you know what, this is enough pieces collected here, this is not for me to cheap price anymore, as I see that I may be wrong because selling pressure is so continuous, then this is the moment when he took out the liquidity that we make a plop to the downside and prices fell lower. So this doesn't have to happen, but you have to see statistically, you have to know that this can happen, and then you have to ask yourself, is it then worth to make a trade? I want to see like behavior same like we had here, that it's cooling down a little bit, that we don't have this much sell pressure anymore, and then we can look again for a cheap buy entry. Then it's totally okay, then forget what I said, then it's a different situation, and then you of course look in for the trade. Yeah, you see, I didn't play it. It was too quick because at this moment till here, um, one could not see that the behavior in selling changes, no? And this just happened then within a 30 seconds. They didn't try to push lower. That means selling stopped here, and then immediately market buyers appeared. So in this case, price is running away too fast from the cheap entry area, and so that means there was no incoming for my at the moment for my play. Yeah. Okay, the next activity level for a range trade, in this case it would be the range short, is this minor POC and the volume edge of the profile again at the 89 level. So here we want to look for responsive selling, and then if we can spot it, we will go and look for the cheap short entry with again some good risk reward with about 5 ticks to the POC, or even 7 ticks or 8 to the lower volume edge of today. And as long as the bulls are not taken over in control and now trying to expand the IBR high, then you can go directly here with the rejection signs at the 89. And you if you then get stopped out, you may get a second chance for the short, but only if you see the wonderful signs of rejection when they trying to build higher volume, higher value above this at the moment volume edge above the 89, but then failing to extend the IBR high. That means failure means also they can make 1-2 ticks higher or 3, and then a second attempt, and you see them putting out the shorts. This is also then a nice possibility to go into this short trade. And if not, if you see this too bullish and still increasing volume, then we need to see that then we are in the possible long trend with acceptance and value above the 89. And if volume then even increases with the pullback or wedge consolidation scenario at the 176.97, then congratulations. And we have a high probability to get a trendish trend. So short, long, everything's possible. Now waiting for the behavior here at the volume edge at the 89, and then we can make a decision if we stay flat, if we look for the long, if we look for the short. So if you want to go and concentrate for the possible short scenario, then what one want to see now is, as we already see people get out of longs and now having the chance to see a second rejection at the high only. And if this appears now, then you have an advantage. Let's call it, then you have an advantage on your side for the short. And because we already see try number one accumulating, try number two here, and it's now going on. And if they push out the longs again, then this would be around here, the cheap entering area. With the stop, I would put the stop then 2 ticks higher here at the 97 level. And you see now they pushing it out. And yeah, it could be going then very fast. And if they stay in control then here, above this edge, above the 89 area, and they collect, then we can think of, wow, cool. Now we're building value. Now that means value follows price. Then we have a trendish situation and have a advantage on our side, and then going here for the long. So remember, if you are already positioned here for the short, because here that's the cheap price area, just be aware of now your motions and your survival brain that will tell you now, oh, uncertainty, and who knows who wins. That's absolutely right. Right now we don't know who wins. We just have an edge of that there was no increasing buying volume when they pull back. But they put out the shorts, put out the long pieces, and that means that this is just giving you the edge where you say, right now, at this moment where you decided maybe to enter the market, you've seen a little bit slighter advantage on your side for treating this as a failed extension. And of course it's not played out yet, but it's a cheap entry. Your stop would be around the 97, and we know that there's a chance that this is a good risk-reward trade. You see this here with my risk-reward measurement. That would mean if they fail, then where would price go? Anywhere else than, of course, at the moment POC. And this was obviously the 83. And so statistically, that's just a good risk-reward. Doesn't matter if it's a loser or a winner then at the end. This is a lucrative trade for me because this is my area. There wasn't a range short with the first try, but you see they expanded a little bit the IBH, the initial balance range high, and then you see there was just one try and then already rejection, trying again and rejection. So bulls are also still in control as long as they stay here around this area above the 90 level at the moment, 90 and 89. We also know this. That's why they are still having possibilities. And that's just in terms of the trading, but that's just the phase of uncertainty you have to know. And look what happens now. They expanded it at one tick, and immediately again some sellers came in, but also some absorption. So we don't know if bulls or bears win this battle, but anyway, it's just, we just need to be patient at this moment. And that's of course sometimes not easy. Of course not. Nobody likes the moment to not being uncertain, being not in control at the moment. But we have to go in trading just with the advantage the market gives us to a certain time. And then we have to rely on it and make our trade decision. And that's what you can measure. And then you can say, okay, because I made it so, I say this is now for me a lucrative scenario. And it's still, even if we got out and get a little bit higher, there's a delta divergence. That means, okay, I mean, I see they buy, but it's not that super bullish buying yet where I have to be feared of. It can happen, and then I'm stopped out. So what? Then I'm stopped out with a small stop. But see, delta divergence, the third try here with the buying was not successful yet. Can be. They can stay in control, but still everything on both sides is just possible. Okay, and now see how bullish they are. Now see in the delta. They get set back a little bit here at this area where you see the first rejection also appeared, and then big buying volumes now coming in. Now we measure new. As the range now didn't happen, and we see that the volumes now taken out and making new highs, we now say this is now a trendish situation. And we're waiting now to build new volume up here and wait then for the pullback scenario, because we know this is now the bull defending level, because they invest a lot to get this long running. So that means if we're pulling back without huge rejection, then we have a good chance for a cheap entry around here with the first pullback to get into this long trade. And this is then a good opportunity also for the trend trade. But one needs to be aware, we need to see absorption at this level where everything started right now, and then buyers coming back. All right. So for the long now, the stop would be below, of course, this area of bull defending level. That means it have to be at least at the 89 level. And if you're entering around this area here or have entered here, then you, of course, having several targets. With the increasing buying volume through this high, you can be patient and stay within a position for a second position or third to get a home run. For the first target to get paid would be the area around the high at the 99 177. And if this is not taking place and people not going back to buying, then we have our safety stop here at the 89. You see now that value follows price. That means POC now switched and moved up to the 94. We are like a shift of the POC. Right now, that means time and price, opportunity and also volume right now follows. That means we have now a building value above the 2 days value edge, and therefore it's just technically also a edge for the trend. And if they fail then going with high volume through the high of the day, then that's then the moment when we say, okay, now it may start so that we see say double top. But before, everything here is in control, and this here is our bull control level where everything now was started, where anything was initiated, where you see where some absorption took place, as we say that this is opportunity of course for the short, but you see short got absorbed, and then they played it aggressively and get in market. That means a lot of positions here in the book, and so that's just a trading opportunity. Some got out now, 500 contracts, and that means this is just the area where the battle is taking place. You see that quickly putting out pieces, and then quick somebody bots into again 200, 129. So that's just can take some time. Right now you can see that there is absorption. That means the people that sell into this level of 95 before 94 and 95, they got absorbed. That means some guy passively absorbing, collecting long pieces. That's a good sign. Even though, of course, we know to take out the high, we need to see that they switch then to active buying. And we would see that then in delta here, that there's a green boom. Now what's happening? See this? Now they switch. And now we can think of changing the stop because price is now at the very high of the day. And we don't want to see now stop is coming back, price is coming back lower than my entry level. I entered 94. The first contract I take out at the 177 means at the high of the day. There's some liquidity in the ask, and this need to be taken out first. What just happened at the very moment. And now if you have a second position, you can now be going on with your stop, pulling it to maybe the entry level. I would say here, I entered at the, let me show where I entered. Okay. Here. I entered at the 94 after I got stopped out with the range short because market decided to stay with absorption in the game. When I made decision, I see this absorption, I see a pullback, and then still some fine behavior here, only small pullback volume. So I decided to get in, not here, but at a cheap price. This was at this moment. And stop was right now at the 89. Now you can pull the stop to the 94 level around where I entered to the at the moment POC or one tick below and just wait for the trade to be played out. You're not having this in control anymore now, and that's totally okay because you entered cheap and you can, I would say, you have your stop and you could even leave now the computer, drinking some coffee because this is totally okay. That now let the market just see if it's played out or not. Of course, you don't have to. You can stay here and sit here and watch it, and you can watch how volume develops, if it's really a strong other time frame trader, if it's bullish enough, and you can go then, and we will talk later. If we're really making a trend here, we can talk then how the profit management could be done. But right now we have to wait because we need to let the trade some time. So it either can unfold to the upside, or if already this it is, then so what? Then you just get the single with the first lot your ticks, your 5-6 ticks, and with the second you wait till you got stepped out on scratch. Because this is house money now. You don't risk anything anymore but the chance that this is a trend play. This is from my hypos. This is my home run trade. And I think at the moment there's just nothing to do but sit and watch and give the trade a chance. And I will tell you when I would move the stop again, but I will tell you, and you of course may have your own strategy, but right now we just sit and wait. In the meantime, I will make some analysis on my mind metrics, on my studies, to be still, yeah, of course you need to do it. Also for me, I do it very quick after a trade because then I can remember still my emotions, sensations and thoughts, because this is important then for measuring how was my sensations, my thoughts, and my emotions at the moment of execution. So for every trade, I have done it already for the first, but for the second I haven't done yet, but still I can remember how it was at the execution, and then in the phase of management, and also for the third trade, how was it with the execution and with the management phase. So this is very important for me to evaluate then later my measurements and tell me what do I have to improve? Do I have to improve my strategy and plays, or do I have to improve more my mental state of mind, the mental game of the mental part of the game? Today right now I'm happy because I only took lucrative trades again today. Like in the last week where I had a good rate of lucrative, but this week also the market is not this slow volatile like it was I think Monday and Tuesday. I think so, yes. And so now the targets got reached, and you can play it much better with this strategy, and you even can increase then your positions but only when you're then sure about your profit rate of your lucrative trades. Yeah, that's what I wanted to say. So for measurement, I now will, for evaluation reasons, I will now measure, and I will get back to the screen when I've done. That takes only normally 5 minutes for this last 2 trades, and will make my measurements, and then I come back and we talk about the trade management now for the second or third position here for this possible trend play. And as long as we don't see new impulse phase, I would not touch the stop right now. I would let it here on scratch on my entry level around the 93, 94, and I would not touch it. Give a trend play some air to unfold, to breathe. Okay, make some interrupt because now we see it's still very trendish. We see increase of volume here. See this increase of volume at the high. So that means we now more and more starting to build a second kind of trendish distribution that is separated by this. The lowest low volume edge of this whole thing would be then here the 97. So for me now it would be okay to pull the stop from, if you entered here around at the 94 to the 96, I would say. So that would give you a 100%, think of it, chance that this will be then a winning trade, no matter what happened. If we can now build a third higher volume edge here, a next minor PSC, and some kind of values built here around, then you can, I would say, most definitely can pull your stop to the even 99 area. Then you would have a minimum of 5 ticks plus in this trade anyway. But I would give him the time, because in Bund, of course, they now can start to just play this game some here, then maybe some short excess before they then start to have a chance to even get higher. And so we need to give the room for this trade. And If it fails, but it fails really, and delta is failing also to increase volume again at the top areas after the first, but even at the second time, and after some excess happens on the downside. You know what I mean? Means signs of strength that not be followed by more signs of strength would be increasing volume in a trend on the upside. Then you can say, all right, then for my second thought, I would then secure the risk even before it's going again below this area. So that's totally then okay. But we want to use this knowledge and signs of strength to give it some time and place to unfold. Right now it is looking beautiful, and right now we are building at least some kind of value at the top area, but of course still I would say this is now stop would be now around this 96, or at the moment if this really is starting to hold you with the pullback, then you can pull it up to the 99. If this here starts to hold and building a edge and building volume, gut confirmation, measuring with volume that value here is built, then I would say we can put the stop to the 99 area and then give it some time to, if it's going lower again, give it some time to see. At least here we could see wonderful an excess on the downside. That means, wow, we are in control, we want to play it. And then watching for the excess with a sign of strength. What we want to see then is then if it's coming back again to the high with a small consolidation, we want to see that there's increase of volume again. We don't want to see lack of interest. We don't want to see huge delta divergence. We don't want to see something like that. What we want to see and what's okay is selling, 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 and then absorbing at this area or at this area and selling, or short pushing lower, boom, and excess and rising and volume again. That's everything okay. And we want to give the trade and yourself the time to see this, because remember, if you're stopping out here now and pushing here to stop and be stopped out too early, you give away so much good ticks and points. If you only have traded like me in this scenario with my play development I'm doing right now with only one lot, then you made everything right for me to take out with the first shorter term scalping target. Well, that's then trades from 4 to 6 or 7 ticks you can make in the Bund with this kind of strategy. And of course, it's totally okay, because if you have lucrative trades and you have a good strategy, at the end, your account will grow like automatic. But you have to stay with your play and be aware of your mental mindset. Okay, folks, you see this here? What happened? I said at the moment when you pull stop to close, maybe even my stop here would be then to close. We then don't give the market the chance to see if we see some rejection, if we see some small excess on the downside, to give it the room it needs to unfold. I will go back here to the volume profile and we draw together the at the moment volume profile. That tells us at the moment where we see, okay, we built this high and see that there are these areas of interest. The first area was getting down. I said this is very too close to put stop here because we want to give them some time to unfold. The next area, the lowest low volume node. I hope you see this and will agree. At this moment, if it's even not so easy to see, but at this very moment, the lowest low volume node of the separated area where the long started then, with this aggressive attempt of buying and seeing this is now a bull control level, which I made to enter then with the pullback at a cheap price area, which I got. See that this here, the first low volume node that separates two profiles, was exactly at the overnight high. You see this here? This was the lowest of all this blurred profile. So the scenario was definitely, like I said, we will to give room to unfold. So this was the 97, means a stop higher than 97 would cut your chances of a ongoing trendish long trend. And that means the stop at the moment, as I said, to pull it above this LVN at the 99 area or below wasn't even the best decision as we see right now. Because we see there is still interest in buying. Okay, they took out some longs, they took out some profits. But at the higher time frame, when you go to this, would you be nervous if price is coming back to test it, if you know you started everything around here? No, you know that you're still in control. You're still in control of the prices and we still have a chance to build value. This is not a have to happen. This is not a must have, but must be, but it can be. So we give the trade the room to unfold. Right now we see they use this control level, and if you're still having a second or say a third position now in the book, it was smart to not put the stop too close, because you see they, at least with the first time, they accepted this area. Now we know if we rate this as an excess at the downside and a sign of strength now, you know what must follow then. What have to follow then is, as long as we consolidate in this area and we don't move our stop now, having everything in control. If we take out this level here with patient selling and increasing selling and you got stopped out, then you're still having a good trade. You still had good management because you give the trade the time and space to unfold. But on the other side, from the reward, it's still wonderful, because if you look and look at the market and analyze the market and how they react, very often it's not happening with one glance. That means take a look here at this day, at yesterday. Take a look here. When they decided to play after the absorption, you see this? They're using this high volume edge from the previous day, and you see this when the absorption started, when they sell and sell and sell, but from the top area, and then making the trend long, and then setting back. That day, when arriving again at this level, and you set your stop not to close, you had the chance then to stay within, and with the overnight, then even the position made another 50 ticks on the upside. That means it's totally normal that made prices coming back and test this area. If it's now on the longer time frame, the opposite thing, that they take out the short, then we would see in even the 15-minute time period more the excess on the upside. That means, okay, would be a harsh rejection of the upside then, and a higher probability that the prices then coming back and filling out this profile and coming back to the 94 and then even lower to the 85 level.
with a high probability, then this would be rejection sign. But as long as this area here, and we're going back to our chart window at the micro level, as long as this area here, the 97, is not taken out with volume, and we just range here and feel comfortable and build value, and we say then a shift of the POC to this level, then that's just the balanced phase after the first trend, and we stay in control. And if you're trading then the intraday swings, then this is the area where you don't need to give up of your long position, because the scenario would be then still alive. Now we see just that they repaired. You see that they just repaired this blurry lines. Look now how the profile is looking right now. It's 10 o'clock and 38 minutes now. You see that's more clear. It's an advantage now even for you to say, wow, we see a short rejection in the micro level. We stay within this distribution. We stay within this distribution that again is the separation of where everything started. So bulls are in control as long as they stay above the 97. Very clear in control. Even though they have to give up some ticks and have to give up some bigger action at the top level, as you see that there was no much time to build more volume than this little, maybe half the volume that is built right now here. So we just watch, and if you're trading those intraday swings, and if you like this kind and be in a position for an hour or longer, then you just have to live with it. If you cannot live with this and don't feel comfortable to stay so long uncertain in this position, and you want some quick results and being very aware of your trading and your mindset, then you may match looking better for the scalping kind of trading, or let's say with a 2-position lot, with 2 contracts or twice 5 contracts or whatever you want to trade. But then you have only the time of a 30 minutes up to 30 minutes you have to stay within a position. Because in this example then it would be, we take out number 1 with this trade and we wait then for the setback and the second try, and if they can make it, we can say, okay, if they take out this lower volume node here, what happens at this moment, then you take out your second. Then you have some mediocre intraday swing trading, not the bigger, the smaller one. And if you say, even this is too long for me, I just want to go with the short-term scalping, what I'm doing right now, because I'm trading just with the 1 lot, and I need to get impulse phase at least 1 and 2 to push me to my target 1 or target 2, then you do it like I did it today. Okay, we just wait now. What happens if they still want to stay in this trade, the bulls, if they stay, want to absorb it, like you see here, they have built some support areas here, providing liquidity stronger at the 95 and 96, and so we want to see either absorption or going back to the market buying, and this would just mean we just stay in control and now seeing a balanced market and trading around. Balanced market at this area means long trend in control. Taking out the short and increasing sell volume would mean a clear sign of rejection of excess, even in the bigger time frame on the upside, which means a higher probability then to just fill out the profile and it's going back to the 94 and then even to the 89 and 83 level. So pause and come back if something interesting. I will come back. Okay, so you see, we stay in control the second time, pulling down to this area where we see the first rejection, that the bulls stayed in control, and also the sellers were not very confident. Okay, how would you describe this here? I would say, no, this is no confidence selling into it. It's not like this here, pushing lower. No, this is okay. That means they stay in control, and we're now seeing just some balanced market and still have the opportunity that is going on for 10 minutes, for 30 minutes, for an hour, or for 2 or whatever. And as long as they stay balanced, we are in control of this thinking longer term intraday swing trade. And that's everything okay. They may even test the high again. And then what we want to see is that there's an holding in this higher build value. We will see then. Because if they're going up and we see then wedge console, we would see then here they stay in above. And that's then a moment when you see that they really invest money again and trying whenever it will happen for the longer term intraday swing trader. And you see that they stay here and investing and absorption, staying, increasing buy volume. And you see then that they get rejected. Then you can put your stop here tight below, because then it was a sign of failure that they don't want to take out this high anymore again. And that's what can happen. A axis then on the downside or something else. Even now having problems pushing higher, you may see that increasing volume, tick, going to the high 14, 15 area, then woof, rejection very quick. Then you can think of secure your profits, but not before. So I think we're not gonna see this anymore till the end of the session, because it's already 10:51. So in about 8 to 9 minutes I will end the session for today. But I think it was a very good session for me, at least it was. And I kept my trading under control. So I also have some small, tiny goals that it's important to make small goals that you can achieve easy, because sometimes you think you're making a huge, big target, big goal in what you want to accomplish at a certain day or in a week or whatever, and then you see yourself always in the pain of failing the big, huge targets of your goals. And the problem is, you do this because you think to become then very successful and very, very good, you have to think very, very big. And that's only partly right, because of course you have to think big, but you also have to reflect your goals, that you say there will be some rocks in the way where you can stumble I don't know how to say it in English. It's not easy to make it with a huge wide goal and a big goal. Make your little small steps, and that would be, it's better to make some small steps and small targets and goals that you can achieve, because you will then remember, you will see your brain doesn't make a decision. It doesn't say, hey, it was only a small goal, now I'm not feeling so good. No, it will say, wow, cool, I'm reaching steady every day my single small goals. And your brain, that will just think in success, that will train for success, that will say, wow, cool, everything I'm preparing, at least small steps, everything I prepare for my next goal, I reach. So for example, I have for almost every weekday some small, at the moment, successful steps to mastery, some small targets. And for example, today on Wednesday, my target was just from 9 to 11 o'clock. I will take only good risk-reward trades with the right stop. Mean I accept the risk-reward when I enter, and I will set the stop to my rule and not too tight or too anxious. And what is the impact then when kept this small successful steps? The impact would be to feel powerful, to feel in control of my trading, and it will lead to change of behaviors. And I will measure then at the end of my trading session, did I do this? Did I accomplish? And at all, partly or fully. And then I can see with the time, measuring this day per day, and seeing then my results, plus or minus, lucrative or lousy trades first. You see, still my old behaviors will not judge me for combine between winning and losing trades, but that's not good. We want to say judge between the lousy and the lucrative trades. And I will see then, and I already see, the more I stick with my small targets, I see that my results will get better. And you can see then, wow, interesting. When I stick to my goals and I see that it's more feeling more comfortable, changing in behaviors, I will also see, that's the theory, but also practically, you can measure it then. You will see, wow, okay, and also my results get better. So it's good, again, having a big target, let's say, want to be consistent, profitable trader and want to live from this, maybe in a year or 2 or 3 or whatever, but in the short term, I just want to see small steps to success. All right. So let's get back one more time in the meantime to our, at the moment, theoretical position we're still in, the third, the home run position. You see now we go in higher. People have no real problems in getting higher because the liquidity so far on the way up wasn't very thick. There was only tiny ask, and it was for the traders easy to get higher. Even you see in the delta, there was not much power in this move up. So don't be too overconfident here that, wow, it's almost on the top and now we will see boom, 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 continue the trend. Mind, you can think this, it's okay, but in reality you see there was not very much power in this move on the upside. That means not much power in buying the market means why did the price then went up? Because even the small power was enough to lift and pay the offer because the offer was very thin. So that's not seldom that this is happening, but a real confirmation would be now, which you're seeing with the selling, that they are still interested in building now value at this very area where I told you we want to see now building value. And that means when they're pushing lower to this 08, 09 area, which they did just 1.5 minutes ago, a more confident sign would be, hey, there is absorption because the selling now, looking, find some passive buyers. And then again, the same game again and again and again. Once we see passive buying, you see someday, and now it happens, they switch then to more aggressive, more confident buying because they are in control and they show now everybody, hey, here I am, and I'm gonna take this and try it again on the upside. So, as I said, as a resume, as a recap from the last trade, don't pull your stop too close to get stopped out when you're having a big reward for a trend play. Let them time to unfold because it's house money, this last contract, the home run position, and give them time to unfold, give it time to unfold to stay within the game. So thank you very much for watching again, and we will see us tomorrow. Today I will do also my recap then, of course, again, where we'll take again a closer look to the handling of today's 3 trades I made, 3 lucrative trades, 2 had a plus at the end, 1 a minus. I'm very happy with all of them 3. I took on every trade with good risk reward. This was also my short-term target, my step to success. I'm very happy and keep on measuring to evaluate that in a few weeks to see if I make some changes to my right now at the moment developed plays, and because it is so nice to see as we end the session that you see it's so profitable to think in the statistical way and in terms of the longer possible success also in the short-term trading to stay in a trend trade, because you see they still made this high again, even if they get some pullback again back to this overnight area, but they stayed in control of the buyers and still at the high of the day. And so that's the thing. If you're in this trade, please now stay within it because they're in control. They're have taken out 2 ticks, 1 tick, the high again. And now you can move your stop to the area of this separation area to be sure to make some good profits, even if they now fail with the second test with a double top on the upside. Then you're not risking much because we see it started here with this absorption moment around 04. So I will put my stop now to the 02, 03 area. Then you have wonderful, again, 8, 9, 10 ticks with this last position. If you then get stepped out with a plus 10, hello, house money. And if not, you stay in the game and wait and give them the chance that they maybe even make a new higher highs and continue the trend. In both cases, and that's the best, you can say, I managed it good. I stayed in control. This is lucrative trade with lucrative entry, lucrative management. It's lucrative. And at the end, in this case, because of the cheap entry, you made some money. And remembering when we started trade number 1, when I said this is not only the range long entry, but also if we stay in control of the area, remember, this is the most possible cheapest price for today to get into then the long if we see the acceptance and rejection. Look what happened. Was it the cheapest price to get into this? I would say most definitely this was the cheapest price. And one would be in this trade and seeing it's still running. It's now about in the profit, and it's in the profit for more than 35 ticks. And I think today I described it, not bad to how I think in terms of risk reward and in the auction theory again. And I'm still learning and I'm still getting better. And thank you for watching. This is Anton Höpfel for Manapa Trading, and see you tomorrow and later with the recap. Bye bye.